Alright, guys, let's get into this.
I was just because the stock's down 6%.
Stock's down. Let's go. All right, we got
Also, you buying any Tesla stock? Let me know in the comments. You going to buy any on this dip here?
the numbers for us as well. You want to just do that? What do you think, Jim? I want to check with you first.
Phil, please.
Phil, take it away. Give us those Tesla numbers.
These are not good, David. That's why the stock is down. Deliveries in the first quarter of 387,000 vehicles. Let me put that into some perspective. The FactSet consensus as of Friday, and it had been coming down, was for 457,000 vehicles to be delivered. First quarter of last year, the company delivered 422,000. So this is a year-over-year decline, the first since 2020 that we've seen from Tesla. And in terms of production, the company produced 433,000 vehicles. They do point out the fact that they had the change in the ramp up in production in Fremont as they come up with the new Model 3 Highland edition. They also had the Red Sea issue, also the issue with production at the Gigafactory in Berlin. Not said by the company, but clearly one of the main factors, guys, what's happening in China. And we know what's happening there as they have lowered their production, and we've seen the announcements or the reports come out of China, and that clearly has an impact here. That's why the stock is under the pressure that you're seeing right now. Again, 387,000 vehicles delivered in the first quarter.
So real quick here, it's very important I say this because China, okay? Here's the deal with Tesla and China. They're actually doing great in China. It's a super competitive market, and vehicle sales might not have been the best recently. But with that being said, if you look at Tesla's market share versus competitors, Tesla's holding up phenomenally, okay? So don't think, it's like Tesla's just bad in China, everybody else is doing great. No, that's not the situation.
The street
Sometimes as a company, you just got to deal with the market you got to deal with.
Expecting 457. Even some of the bearish analysts were expecting, 410, 415, not 387. Guys, I'll send it back to you.
Quick.
Sorry.
Oh, I was going to say, Phil, full year estimates, I guess we can say goodbye to some two handles, right?
Oh, I think that's a given. I think that's a given. Most were already bringing them under 2. We had a few people saying 1.91 million deliveries for the year as the estimate that they were putting out there. For some perspective, and I don't know if we can pull up the chart that we have showing annual deliveries, they delivered 1.81 million vehicles last year. And if they were to go to 1.92, 1.93, that would be about an 8% increase in deliveries. Now the question becomes, do they hit 1.81 million? Is there a possibility that they don't even make that? That possibility is out there, but it's early, and a lot of things can change. Obviously, production is likely to come back much stronger, and deliveries should improve in Europe. They've been clearing out a lot of inventory in the first quarter, and if things start to firm up a bit, then certainly we expect higher numbers in the second, third, and fourth quarter. To what extent remains to be seen. China's the wild card in all of this, guys. They are brutally competitive in terms of what's happening with EVs and EV pricing, and that's having an impact. There's no doubt that that's having an impact on Tesla. And remember, Shanghai is not just where they supply China, but that's also where they supply other markets around the world. So they can offset some of the impact of just pure China and the competition there in terms of vehicles being shipped to other markets out of the Gigafactory in Shanghai. But there's no doubt that this competition in China has had an impact.
Now, Phil, I know...
All right, before we go further here, let's talk some good, let's talk some bad. Bad, obviously, number missed. I mean, my guy was under 410, who I would say is much more knowledgeable than anybody I probably know at calling numbers realistically. I think they were at like 406 or something like that, if I recall. And so the fact that it came under even where they were at, definitely worrisome, right? And it also shows Wall Street analysts, like, they don't have a clue what's going on, right? The fact that these Wall Street analysts just a few days ago were at 457 on average, 457, 456, company did 387. Like, oh my gosh, they were, analysts, oh my gosh, they missed by a mile, right? The good, if you want one piece of good news in regards to this whole situation for Tesla, and this is really the only good thing you can really gather from it, okay, is now analysts are going to go extremely bearish on Tesla here in the short term. Short term meaning the next 6 to 12 months. They're going to plummet their numbers, their expectations. I mean, absolutely plummet what their deliveries expectations are for this year, production, revenue, EPS, margin. I'm telling you, they're going to just absolutely dump on this stock for the next month or so, okay, and bring down their numbers massively, which leaves Tesla actually into a decent situation where potentially they could actually, have some upside alpha performance there throughout the year if they can come in just a little better than analysts are at, right? Because analysts are going to go extremely bearish on Tesla now.
The United States is not at the fulcrum. It is China, and I know the problems in Berlin, but there's this kind of this newfound, we don't want to go electric. We want ICE. We also are willing to have hybrid in this country. It has reached
Americans are embracing hybrids right now.
But it's not what. If you're someone who wants us to electrify and get off of nuclear, go to nuclear and get off of coal and get off of nat gas, it's not going to come together at that level.
No, but that's not how consumers think, Jim.
No,
I think there's very few people in this world who sit there and think, well, ultimately, is the fuel source for this a coal-burning power plant? Is it nuclear? Is it hydropower? That's not how consumers think. You know that. The way a consumer thinks is, what's the best option for me price-wise? And then also, am I comfortable making this transition? And there is no doubt that the recharging issues in this country are a huge issue. The first adopters, they could live with it. Not the people who are now looking at buying a vehicle now. And I hear this time and again from my friends who are considering buying an electric car. Almost all of them say the same thing. If I'm in Chicago and I've got to drive to Cincinnati or St. Louis or Minneapolis, I ain't doing it in an electric vehicle. Otherwise, I got to sit there and plan some ridiculous charging.
We test drove Rivian. All I could think of was like what happens on 95. On 95, like, am I going to push it to a road, to a rest stop? I mean, it's worrying.
Hey, Phil. The company reports obviously April 23rd, so we'll get a lot more details then in terms of price cuts, what actually meant to underlying cash flows. You were in Chile not that long ago. You mentioned the production out of the Shanghai factory, but give us a sense in terms of your expectations in competition in other markets where the Chinese can come in with vehicles that are still priced far below what Tesla's able to do.
Not only are they priced below what Tesla's able to do in electric vehicles for the most part, because of the advantages that they have in terms of scale, in terms of labor costs in China. But on top of that, David, when you go to a place like Chile, the thing that you notice is that the internal combustion engine vehicles, $4,000, $5,000, $6,000 cheaper from a Chinese automaker compared to a comparable vehicle. We compared one from Great Wall versus a Toyota. They were both mid-size SUVs. No comparison at all. And when we talked with consumers, they all said the same thing. It's pretty good. Why wouldn't I buy it? It's $5,000 cheaper. And that's the competition that not just Tesla, but all automakers are facing. And in terms of EVs, yes, Tesla is king of the hill in the United States and was king of the hill up until the fourth quarter with BYD. Full year numbers, I think BYD probably passes them this year. They're still very formidable, and they've got a lot of advantages. But they are facing a period here where they've got to deal with softness in a number of key markets.
All right, hold your flip and flapjack and horsies for just a moment. Oh, why don't you have a look at this? This came out 5 hours ago. BYD, this is out of Reuters, BYD hands back top EV seller title to Tesla after Q1 sales decline. BYD, China's biggest EV maker, reported first quarter 2024 sales fell 43% compared to the fourth quarter of 2023, handing back the title of the world's biggest EV seller to Tesla, winning it all last year. So, the moral of the story is there's problems that are way more broad than what's going on with good old Tesla Tesla. And the fact is, they want to say this, the way some of this commentary sounds makes it sound like Tesla's losing in China. Like they're way behind, like they're doing bad, like their market share is horrible. And then you look at the reality from a few hours ago in Tesla's top seller. It's fascinating, right? So, let's get into where we go from here. But the bottom line is the long term still looks great for Tesla. Short term, crap. But we all know that. Like, this is not a surprise to any of us, to be quite frank.
Well, it wasn't a good quarter. I want to get to Dan Ives and everything he's got to say. Of course, longtime bull on the stock from Wedbush Securities, Managing Director of Equity Research. Dan, I'm reading your report, which you wrote very quickly. Let's call it as it is. While we were anticipating a bad quarter, this was an unmitigated disaster. First quarter deliveries was a nightmare quarter for Tesla, you wrote. Elon is now pressured by the street, and China demand remains very soft. And you also say, in this case, street criticism is warranted. But then I end, and you still have an outperform rating, and I wonder why.
Hey, look, I mean, for the long term, like in terms of the actual opportunity for EV, for full self-driving, for autonomous, that's still there. But let's just call it like it is. This is no smoke and mirror. I mean, if you looked up train wreck in the dictionary, you'd see a picture of Tesla's 1Q quarter. And, you know, I think the big problem is deliveries. How do you reverse the trend? And that's why I believe this is a fork in the road. In other words, Musk either turns this around, whether it's cutting prices, put the strategy in place, or David, I think we sit here maybe 3-4 quarters from now, and this was actually a seminal moment and the start of what could be some darker days ahead if they do not turn this around.
All right, but what does the turnaround look like? You say cutting prices. Clearly, they're facing more competition from Chinese EV makers, not just in the domestic Chinese market. So what do you do if you're Tesla?
I think you have to lay out the strategy. Okay, what are price cuts going to look like? When are the new models coming? What could software be as a percent of revenue? What's the AI roadmap? Right now.
So wait a minute. Wait just a minute. I completely disagree. Completely disagree with Dan Ives, okay? More price cuts? No, that's not what Tesla should do anymore at this point in time, okay? The price cuts haven't worked the way they were intended to work. Bottom line is, okay? So if demand's not there, you can't force the demand, okay? The bottom line is if the demand's not there, you can't force the demand. In the market I live in, Las Vegas, okay, in the great financial crisis, real estate prices fell 50%, and you still couldn't find buyers, despite dropping the price 50%, okay? If the demand's not there, the demand's not there. Now, as a real estate market, you're stuck with whatever you got to work with, right? As somebody that controls your own product, you can control pricing. If you want to take margin at a particular time, you can take margin. So to just say, oh, just cut price, it'll move, it doesn't work like that. It'd be cool if it did, but it doesn't. Okay, if the demand's not there, the demand's not there. So for Tesla to just say, oh, let's just keep dropping price, it's just, at the end of the day, it's not worth it. Tesla's insanely competitively priced in China, in Europe, and in the United States. The three main markets they got to focus on. And so the bottom line is, you know, if anything, they should be going up on price in the back half of this year.
It's essentially playing darts blindfolded.
Take margin.
You don't really have an adult in the room. The conference calls, as we've talked about here, have really been horror shows. So investors, they're hoping in terms of that, what's on the other side of this. Now, in terms of the growth, the opportunity, $30 billion in cash, they're in a phenomenal position from that perspective. But I'd say probably this is what I'd say in the last 5 years, probably the darkest period relative to what we're seeing in China. And this quarter, explanation mark.
All right, but you talk about, the hope of investors. You still clearly have hope as well. So what do you base your hope on? You've been, the last 2 minutes here, you've been quite negative.
Mm-hmm. It's that we're 3-4% of all automobiles are EVs. Is that full self-driving autonomous? You could argue that could be $1 trillion worth of value from a software perspective. The China story, you've seen the price cuts start to stabilize. They had a good week of the last quarter. So there are some optimism, and I still believe you could be toward 2 million units for the year. But this quarter, there's just no way to sort of glass half full it. This is one where even whisper numbers call it 415K. 386, a disaster.
So is it supply or demand? Because we expected some production setbacks in the first quarter.
I think supply would be dog ate the homework. Maybe call it 30K. You could explain that in a press release. But realistically, it's demand. And I think the problem here, Sarah, is that, okay, you're either going to cut prices or ultimately, you're going to hold serve and then focus on what you could actually do, but hold margins and where volumes could go. The problem is that you can't just put one toe in the water. In other words, what's the strategy? How are you going to?
And do you know?
Oh man, I wish they could have kept going there. So to finish off thoughts around Tesla before we get more macroeconomic, stock market in general related with Mr. Big Short, Steve Eisman here, okay? I did some very important things in the main channel video last night, right? I went back throughout history throughout Tesla's, past 10 plus years and showed you different time periods where Tesla's revenues downtrended. And there was actually a really substantial downtrend. I think it was when they went from Q4 2018 to Q1 2019. And I believe their revenue fell something like, it was in the 30 to 40% range on a sequential basis, which was a pretty shocking drop at that time, right? And it could have been very easy to say Tesla's best growth days are behind the company now at this point in time, right? Obviously, I was completely wrong. And then I showed other periods in 2015, 2016, other years where revenue actually declined for the company. And no one remembers those quarters now, unless you go back and you're, a math nerd like me and a stock nerd, and you like to go back and look at historical data and numbers. No one else is looking at that, right? And those quarters are long gone. No one remembers them. No one remembers what the numbers were. No one remembers that 30 to 40% drop in revenue on a quarter-over-quarter basis Tesla had back in 2018 and 2019. No one remembers that now, right? But it was what it was. And so right now we're going through one of those periods where Tesla's numbers really bad in the short term, right? And really bad is relative. You compare Tesla to Tesla. Really bad by Tesla standards, horrible by Tesla standards, but the long-term story is still there. This quarter will be a thing of the past. 2 to 3 years from now, no one will even remember this quarter. No one will remember this video. That's just time moves on, things happen, and then, Tesla will be doing some crazy, way bigger revenue number. And I'll be bringing it up in 3 years from now. Guys, remember that quarter in 2024, the first quarter, and remember the second quarter? Those were really bad quarters, and everybody thought Tesla's growth was done. And then look at where their numbers now. We'll be doing that in a few years, okay? A noted Tesla bear says Elon Musk EV maker could go bust, and the stock's worth $14. Oh, boy. Tesla could go bust, while with the stock could fall $14, says this hedge fund manager who's been shorting Elon Musk's electric car maker since 2020. So if he's been doing it since around, let's call it the beginning of 2020, he's in some trouble. If he did it since the end of 2020, then maybe he's okay, right? His comments come after Tesla reported 386,000 vehicles. We all know the number already, right? This is what he says, okay? This is really the beginning of the end of the Tesla bubble, which probably, arguably, was the biggest stock market bubble in modern history. I actually think the company could go bust. See, this is where folks lose all credibility, okay? This is where folks just lose all credibility. You could have a belief that Tesla, there's a lot of people that are always talking about, they've been talking about this for years now. Tesla's under $100, right? And plenty of those people, Tesla's going to $50, $60. They've been predicting this for 2 years now at this point in time, right? It's going under 100. At least you have some credibility when saying that, right? You lose all credibility when you say Tesla's going bust, okay? Tesla's extremely profitable. They're going to be a lot more profitable down the road. But let's just say hypothetically, I'm not even accurate on that. Let's say they're no more profitable in the future. So do you expect them to start losing billions, tens of billions of dollars, blow through all their cash, never be able to get any funding? That doesn't even make logical sense. Okay, that's just preposterous, ridiculous, crazy talk. You can say that, but it's just what are you talking about? Okay, yeah, go bust. Okay, that's insane. Okay, pure insanity. But this is a sort of situation you get into in regards to how bearish the sentiment is, right? And I was talking to private group members last night, and I was saying, I have not seen, Tesla sentiment is so bad right now. I said, this is the worst I've seen Tesla sentiment as somebody that's been a shareholder of this company for a long, long time, right? This is the worst I've seen sentiment since 2019. Since 2019. Is it as bad as it was there? Not quite, but it's getting really close. I remember 2019. I remember the Gordon Johnsons and these other analysts and the things they would say about Tesla stock. I remember people saying the stock was going to $5. I remember people saying $0. It was going to go out of business, right? We're getting close. We're actually getting really close to that level of bearishness now. When you got people talking about company going bust, when you got people talking about the stock falling like this, what? This is insane. Okay, absolutely insane. He's predicting that the stock could go down. So here's more, right? He has taken a bearish Tesla call further, suggesting that the stock could fall to $14 a share. He said his call is based on an estimate that the company's full-year earnings per share this year would be $1.40. Okay, the company's going bust with $1.40 of EPS? He contends that Tesla is a no-growth stock. That's factual probably right now. In the short term, long term, no. And should be valued at 10 times forward earnings versus 58 times forward earnings currently. So he doesn't want anybody looking to the future, growth, products, services, things like that. Sir, for great growth companies, which Tesla is one of the greatest growth companies in the market over the past 10 years, factually, right? People aren't that dumb. They realize, oh, this company is going through a slow period right now, sure, but they're going to get back to major growth, right? Forward earnings are an important, no one looked at NVIDIA as a growth stock a year and a half ago, right? It was a business in decline. And now everybody and their grandma wants a piece of NVIDIA stock. Forward, things can change very quickly in 12 to 24 months, I can tell you that much. Forward earnings are an important metric used by traders to gauge the value of a stock. If Tesla hits $14, that would represent around 91% downside from Tuesday's close. Tesla shares are already down well over 30% this year. I think, however, Tesla cannot be $14. If it falls under a certain level because of everything that's going on, it's going to go bust. This is a market we're in right now, folks, in regards to Tesla. I mean, it's pure insanity. And here's the deal, okay? Here's the deal. If you think about the bullish side, and you think about where things were at the end of 2020 and going into 2021, right? It was out of control bullishness in regards to Tesla at that particular time, right? And everybody was throwing $1,000, $2,000, $3,000 price targets, right? Retire on Tesla. I watched it all, right? Saw it all play out. Meanwhile, at that time, I was saying, I think Tesla could be in for a tough next few years, right? That obviously ended up proving correct. But now people are getting just as ridiculous on the downside when they start talking about $14, talking about going bust, talking about it's going to $50, $60, all these things that they're throwing out there. And I'm just like, y'all can be ridiculous if you want to be ridiculous, but you're going to look back 2 to 3 years from now and you're going to, have some clown makeup on, just like the bulls had clown makeup on that were talking about the stock's going to be $1,000 at this time, $2,000, $3,000, retire on Tesla, right?